All right, so allow guys to keep on joining. But before we start the day activities, let me answer this question that says that if we are in a London session, does it mean that you are because we are in European session, so Euro must buy? That's the question. No, it doesn't follow. And I'm saying that supposing we have a downtrend like this, look at a downtrend. In a downtrend, you have possibility of having a push, corrective structure, and then when London session now open, which is European session, you have possibility of having this Euro USD to buy. You have it to buy. What is it buying to? Break this stop. I'm going to meet everybody now. You are stopping this class. All right. So because you are in a downtrend, Europe session can come, break this Asia low, break it and begin to buy here. Why is it buying here? He wants to come and pick liquidity at supply, preparatory for what? The York session, where you have the two trend. So the two trend will now come like this. So for the fact that you are seeing this buy here, does not mean this buying is taking place because we are in Europe session. No. Because London session must induce opposite to the main direction. If the main direction is down, London session must react to go and pick liquidity preparatory for New York session to push it down. I'm going to show you an example. Okay. Now, this is for a sell trade. But for a buy trade where you have up corrective structure here, let's say this is what? Let's say this is Asia. Do you now think that because we are in Europe session, Euro USD will now first buy like this? No, it's not going to happen like that. What's going to happen is simple. All right. What's going to happen is simple. It's going to push down, push down, push down, push down, push down in Europe session, preparatory to picking a level, a demand zone, and do what? And push up in New York session. Why is it pushing up in New York session? This is the true trend. This is the Asian session. This is the reaction created by London session. So where the reaction will go, whether up or down, depends most of the time on the direction, the overall direction of the market. If the overall direction of the market is a downtrend, then the possibility of the majors buying in Europe session is there. And the essence of them buying is that they want to go and find a level at the top where liquidity can be picked. I don't know if you understand that for big liquidity to happen, market must be at the top in a sell trade. And for big liquidity to happen, market must be at the bottom for a buy setup. Do you understand now? So this you must get clearly. Clearly, you must understand it. So for instance, because you have this, and it broke to the upside, does not mean that because this is a downtrend, so it must break to the upside to pick liquidity at the top in order to flush. I just hope I can see a downtrend to give you example what we are talking about. No, I want to see an uptrend. An uptrend. I'll show you example now. And I told you everything you are doing here is practical. You know, there's no forget about all the rubbish. I'm not condemning anybody, but I've gone through the same system and I knew what I learned from there. You understand? Understand what I'm saying? You know, I'll tell you the core of some of these things. Look at this. What do you see here? What do you see here? This consolidation. All right. What time is this? What time is this? What time is this? Mute yourself. One person should mute himself and tell me what time is this? This can be what time?
The screen is dim.
Eh? Eh?
I can't see it clearly, but I think it's I can't see the.
You should look at the time down now. Look at it now down. Look at the time down. Look at
9 o'clock.
It's 9 o'clock. What session is 9 o'clock?
Euro.
London
session. Correct. But what type of market is it? What direction? What direction? Yes. What direction is this? Uptrend or downtrend?
It's an uptrend.
Correct. So
it's a consolidation.
Yes, this is consolidation. This is London session. But where did it break to before it pushed to the upside?
Down.
Correct. That's what I'm trying to tell you. So in a London session or European session, you see consolidation. After you see push here, you see consolidation. The market will push down first, peak liquidity here at psychological level, and then move to the upside. What happened here? Consolidation here, Europe session. What does it do? 9 o'clock market open. The first 3-4 hours, it pulls down. Why does it push down? It has come to peak liquidity here. All right. After picking the liquidity, what next? Boom, to the upside. Do you understand now? Are you people getting it? It's as simple as that. Yes, and look at here. What do you see here? What do you see here?
An engulfing candle, sir.
Correct. So the market is coming. This engulfing candle here, when it pick it from between here and here, you don't see a sell candle. What is it telling you? It's just telling you that the liquidity, there is excess demand between here to this place, and there was never an excess supply. So market is picking liquidity where it remembered that there was excess demand over supply. It picked that liquidity from there and boom to the upside. And let me tell you one more thing. The banks don't use this chart that you are using. I am telling you again, I've told you before, banks don't use this chart that you are using. What banks have access to is the record of their customers. So at this particular level here, where you have excess demand, which is 1.1270, bank have it that many customers came to have a to book for a buy of euro against the dollar at this price level. All right. So when it is here, other banks who also are privy to this record, they are not going to buy here. They are going to find a way to push the market to a price level that their customer, most of their customer requested a buy before. Okay, they are going to come there, and that is why you see this liquidity. And let me show you something, right, very quick. Look at it here and here. Do you see the speed with which the market come down, pick that liquidity and run away? Do you see that speed? Yes, that is why you must understand some of this stuff very clearly. The price level that banks buy, all right, the price level that banks buy, investment institutions, the price level they buy, there is no crowd there. What do I tell you? There is no crowd there. Look at here. Look at the number of people buying and selling here. There is crowd here. Is there any crowd here? You know, no. This happened in a jiffy. Yes. It just hit that price level, pick that liquidity and get out. And guess what? Tell me the time that the liquidity is picked. I put my cursor there. I don't know what to call it. What is the time?
13.
What session is starting at 13?
That's New York session, sir.
Correct. Liquidity is big. Then what candle is this? What time is that? That big candle. What time is that?
That's 2 p.m. 14 o'clock.
2 p.m. 14 o'clock. What did I tell you is happening 2 p.m. What did I tell you?
The capital market open.
Correct. So the real liquidity is coming at the opening of New York Stock Exchange. That's what is packing the entire liquidity in the system. Because why is it so? Because the capital market of the biggest economy in the world is opening, and the market must react to it. Market must react to it. So what I'm telling you, if you open your ear and you listen very well, I'm giving you the real gist. I can bet it with you. Go to YouTube, go and search it. All I'm telling you, you will not get it. It's based on my personal research. You won't get it. I'm telling you, these are coded stuffs that companies, investment institutions, they are privy to this information, but they will never disseminate it. So retail traders are not aware of some of these things. But because of the opportunity that we have, studying economics, looking at the relationship between looking at the relationship between four basic primary markets, linking it up with what is happening in the chart, we're able to get some of these secrets. I'm showing you real quick everything that's happening. I can see it translated directly to the chart. Do you understand now? So don't say because we are in Europe session, therefore GBP, USD must buy. No. Do you understand? If you see that the market has pushed, and has gotten to a resistance, looking at this place, that's a resistance. It pushed here, it fell. Now, looking at it here, it has gotten to the same level. Is that not?
Yes, sir.
Okay, now let me now tell you something. What do you see here?
Consolidation, sir.
So after the consolidation, where did the market push to?
Upside, sir.
Correct. What does it tell you? If from a fair value point of view, you see a market creating a fair value in a particular location close to the supply and is breaking to the upside, what is he doing at the upside? What is he doing?
To liquidity, as you said, sir.
Now, when he's picking liquidity, after picking liquidity, where is it to go?
Down.
That is down. That's sell that you see. That's it. That's it. You can see I've given you many setup that is based on this trick alone. When I have my fair value, I'm looking for where it's breaking to. If after formation of this fair value now, I have this market break to the low here. Look at here, the same thing I told you that time. All right, between here and here, do you see any supply? You see demand. So if this market creates a fair value here and now break down here to come and pick this level at demand zone. So what are you expecting? Buy. It can't defy logic. It can't go below here. Because if it must go below here, it must give me, it must go and pick liquidity to the upside before it will break down. So for the fact that it did not break to the upside to pick liquidity, if it's breaking to the downside to pick liquidity, it's picking at demand. So I'm going to buy this to the upside.
Okay.
I don't know if you understand what I'm saying.
Yes, sir, I understand.
So what I'm telling you is what is called behavioral analysis. Look, people don't look at technical analysis again. When you know what you are doing, you can match fundamental analysis with behavioral analysis and you are done. All right?
Yes, sir. Thank you very much.
That's why you see most of the time you don't see me drawing trend line. For what? I've told you your trend line is very irrelevant. It's only useful to you alone. It's not useful to anybody. It's totally subjective. It lacks objectivity. All the technical drawing you are doing lack objectivity. Because if you do it, another person cannot come and depend on what you have done. I don't know if you understand what I'm saying.
Yes, sir.
So it is only you that understand what you have done, and it is only you that is relying on what you have done. And market will never say because you have done this, is going to follow what you have done. Market is going to invalidate whatever you have done there. That is not to say you should not draw your trend line. I'm not condemning your trend line. But I'm saying that 21st century methodology of looking at the market is a holistic approach to determining direction, to determining bias, and you never go wrong. You never go wrong. Is that okay now?
Yes, sir. Thank you.
So if you follow me down to intermediate and advanced, you see more of some of this stuff. But then let's go to today's lesson. All right. Let's go to
Thank
today's lesson.
you, sir.
Right. I noticed that it is regularly, we are usually average of 25 that attend this program out of 80 people, which is something people that signifies. All right. What it tells me is that I can't have more than 25 people that will go to intermediate. Even if you have 100 accounts, if you have 100 accounts, open with my link. If you don't go through this basic, I can't teach you in intermediate because you are going to give me stress. You are going to give me plenty work. For instance, now, most of you that are very regular and consistent in going through these basic classes, when you follow me to intermediate and I'm mentioning some things, it's not going to be a surprise to you. Many people think I don't know what I'm doing. I know what I'm doing. See, you might think that all this I have outlined, all this is that I'm helping you. I'm also helping myself. I don't want to teach anybody that will give me stress, that I will teach something 20 times before you understand. That is why I've taken my time to break down all this to the simplest possible way, so that when you are building on it, before I say it like this, bam, you understand. Before I mention this, bam, you understand. There is no way we will discuss fundamental analysis in intermediate that most of you that are very consistent on this basic will not get it before I say it. And when you are consistent like that, down to my advanced classes, when you go to some group, you will teach them. You will teach them. Many people may not know today. I have to open up to you. Many people may not know that I am better at teaching than even at trading. Oh yes, I am better at teaching than the other way around. Yes. So it is possible for me now to create traders who will be better at trading than teaching. I don't know if you understand what I'm saying. So that is me. That's why you see that I just come, pick whatever I want to pick, I'm out. 2 days, 3 days, I don't see my setup, I leave it. I don't force it. And that is the same thing I'm inculcating in all of you. Don't force anything. Don't say a trade must appear on your MT4 just for appearing sake. You will lose money. So that takes us to what we need to learn today. That's day 5. 2 things we want to learn today: understanding risk management, understanding trade management. And I want to ask you a question. Out of technical analysis, fundamental analysis, risk management, which one is the most important? If you want to answer the question, unmute yourself and answer me, and mute yourself back.
It's risk management, so.
Okay, risk management, correct. Another opinion? Any other opinion? Any other opinion? Somebody say risk management. I'm listening. We're even having 9 people today because we are discussing risk management. Hey, these guys are missing.
I think when you understand the fundamental and the behavioral patterns,
Yes.
risk management might not be an issue for you.
Okay. Okay, that's your own opinion. Any other opinion? We're having just 9 people today out of the regular 25 because we want to discuss risk management, trade management. Hi. Any other opinion? Okay.
I will continue on my own opinion by saying risk management, because even with the fundamental knowledge and the technical knowledge, you still find yourself losing trade. But with all this explanation you've given us now, or open eye to how, how trade charts are being achieved to positiveness, you still find out that it's risk management that is the father of all. Because if you cannot manage your risk, you still lose your trades, whether you have fundamental or technical knowledge.
Okay. All right. That's good. All right. So you have all said well, the most important is risk management. Because why is risk management the most important? Let's take, for instance, somebody is a super professional. He knows technical analysis to the core. He knows fundamental analysis to the core. But remember, no matter how you understand some of these things, when you are going into your trades, you have to still treat your trade in form of probability. You still have to treat your trade in form of probability. But because you have had a lot of reasons why you must take that trade, you will now discover that the probability is favoring you, is stacked to your favor. So, excuse me, if the probability is stacked to your favor, good for you. But if you say the probability is stacked to your favor, and when you are taking your trade, you now risk, let's say 10% of your account per trade. Well, if you win the first one, that's good. Maybe when you win this first one, you have won, let's say you have won 3% of your trade, but you risk 10%. You won 3%. The next one you go, you risk 10% and you win the trade. How many trades have you won now? 3%. That is 2 trades and you have won 6%. That's great. The third one, you risk 10% again, but this time around, despite the probability that is stacked in your favor, you still discover that you lost it. And because you have lost it, what's the percentage that you have lost? You have lost 10%. And then when you won 3% in 2 places. Out of 3 trades, you have won 2. Great job. But these 2 you have won, it is only 6%. Right? And only 1 that you lost, you lost 10%. All right? So minus 6% that you won, minus it from 10% that you lost. You are down with what? With 4%. Can you see? With all your knowledge, with all your professionalism, because risk management, you don't understand the core of risk management, you now discover that out of 3 trades, you have won 2, you have lost 1, and your account is in the negative. Do you understand now? So risk management is the most important. Is the most important. When you understand technical analysis, fundamental analysis, behavioral analysis, and you don't understand risk management, you will not succeed. Person will not succeed. Person will not succeed. Now, this evening, I'm just going to briefly discuss with you my risk management strategy. But before that, what I'm going to do is that I'm getting ready. In fact, within 2 to 3 months, I have a target to produce about 100 videos, about 100 training videos in the next 2 to 3 months. So those that will be going to intermediate, I'm going to give them a private password, YouTube password. that you'll be using to watch those videos. All right, free of charge. But if any other person want to get access to it, the person will pay. That's why I'm not going to make it public. I'm going to make it private. All right, I'll make it private. Then you can have access to it if you are going to intermediate. This 25 regular 25 people, you want to have access to it, it's free of charge. But if there's anyone among these 80 people that enroll here, but are not regular in this basic class, for them to jump to that intermediate class, they will pay to get there. They're going to pay, because I can't take them as my students, because you can't stay away from a live session. You can't stay away from regular class and say you are my student, because I can't boast that I train you. I can't boast that I taught you, because I don't know you, I don't see you. I have not tested you. I don't see your assignment. Those that I have tested, I've seen the assignment, I've seen this, I've seen that. The questions they don't understand, they ask me, excuse me, in live session here. So I know them. So when we get to intermediate class, I can't say I don't know them. But for you, I never see, because I know they will watch this video later. Don't tell me that you enroll in basic class, and so for that reason, you have right to now jump to intermediate. Even if you open 100 live account in my link, I don't care. That's not my priority. My priority is for you to know. If when you are talking somewhere, they say who taught you, you mention my name. That would be a kudos to me. Do you understand me now? So now let's go back to our understanding risk management, understanding trade management. So risk management, I'm now telling you here that please and please, for Christ's sake, I am not one of the people that will tell you that FX is very easy. Just come and be packing money. Just be packing money. Just be packing money. It is a lie. Because there are times that markets will not just behave nicely. Market will be flashing up and down, flashing both directions. It gives a lot of headache. Before, some of us and many of us who do not understand when market becomes untradeable, we keep on trading. As a result, we'll be losing the money. You are not losing the money because you don't know it. It's not that you don't know it or you are not following the rules. You are following the rules, but because there are some things that is happening in the realm of the fundamental that is not making this market to trend the way it's supposed to. And so if it does not trend the way it's supposed to, it's going to be flashing up and down, and it might make you to lose money. So, but because of that, you now ensure that you put a very sound risk management strategy in place in such a way that when you are losing any trade, don't lose more than 1% of your account. When you lose any trade, let the loss not be more than 1% of your account. And then the essence of keeping it low like this. Okay, let me start an example. Let's say you have a $200 account. All right. Let's say you have $200 account like this. Okay. Now, what is 1% of $200? Is 1 divided by 100 times what? Times 200. So 0 cancels 0, 0 cancels 0. 1 times 2 equal to what? 2. Can you see? So if you are trading a $200 account, on no occasion should you lose more than $2. It then means that, and you know that the minimum lot size. I did not discuss lot size and all those things with you. That is trade size. The minimum lot size you can use, therefore, for any trade must be 0.01. 0.01. And then for you to take a setup, the stop loss must not be more than 20. All right. So that if you lose this trade now, it's going to be 20. Somebody can punch calculator for me. 20 times 0.01 times 10 is what? What is the answer? It must be equal to 2.
$2.
Eh?
$2.
$2, yes. That is the 2%. But if you have a setup that the stop loss is 30 pips, you know that if you replace this 20 by 30, by the time if you lose, you are going to lose $3, which is more than 1%, which is unacceptable. At the beginning, as a beginner stage, your loss must not be more than 1%. But now the good news is this. Do you now know that it's possible? Okay, let's take for instance, on Monday, we took a trade of within 2 hours, we got 80 pips drop. 80 pips. Abisola, are you hearing me?
Yes, I am.
Are you getting it?
Very well.
Okay. Now meet yourself back. So on Monday, we got a trade. I gave you card in here of 80 pips drop. So assuming you have $200 account and you are using 0.01 and you are using 20 pips stop loss based on structure, I'll show you how to do it when we get to the next class. All right. So let's see the profit you are going to get. So it's going to be 80 times 0.01 times 10. Convert it to pips. That's why I say times 10. What is the answer, guys? What is the answer?
$8.
Correct. Thank you. Meet yourself back. $8. Can you see? So I'm not telling you that. What I've told you is that when you lose a trade, you lose $2 here. You lose another trade, you lose $2. You lose another trade, you lose $2. You win this trade, you have $8. Can you see? So here now, you have lost 3, you have won 1, and you are getting 8 minus the total of this one is 6, Abi. And the total of this one is 8, Abi. So 8, that is your profit, minus 6, that is your loss, is what? $2. Can you see the logic now? Why is it that you are now getting $2 profit, despite the fact that you have lost 3 trades in a row? You have lost 3 trades in a row, you have won only 1, and you are still in profit. Why? Because each time you are losing here, you are keeping your loss to the BRS minimum. BRS minimum. BRS minimum. Give me one active. BRS minimum. And this one, big profit. Can you see? This is what is called risk management. So now, and I want to tell you, and I want to ask a question. I need your opinion. Between capital market and forex market, which is better to trade and why? Opinion before we continue.
Well, in forex market, you on your own can decide your risk,
Correct.
and the level of risk you want to attain or you want to part with.
Okay.
But in the capital market, you cannot decide the level of risk you want to, you can afford, because you cannot do anything. So If tomorrow you put in your 1,000 naira and everything go to zero, I mean to 1 naira, there's
Yes,
nothing you can do. You just have to fold your hand and wait for further appreciation if there's going to be any.
correct. That's correct. That's absolutely correct. Any other opinion? Any other opinion? That's absolutely correct. In forex market, it has control. Let me, or somebody want to talk? Okay. So forex market has control. You can control your risk. You can decide to say this trade, I can only afford to lose 2% of my account. Somebody can say he can afford to lose 3% of his account. Somebody can say 5% of his account. But myself, as your teacher and your mentor, I'm saying that don't risk more than 1% of your account. Okay? When you get to advance, I'm telling you, but you discover that with this $200 now, all right, when you are winning, you are only winning $8. It looks as if $8 is nothing. But when you are consistent with making it, at the end of the month, you'll be shocked that you make 100 US dollar. That's 50% return on investment in 1 month. But when you get to advance, I will teach you. I've taught my my guys for quite some times now. I will teach you how to trade small accounts. All right, I will teach you how to do it in such a way that instead of just getting $8 only one, you can get $1, another one, another one, another one. You can get it up to 7 instead of getting it only on only one. So meaning that instead of having $8 profit, you are going to have 8 times 7. You are going to have 54. You are going to have 54 US dollar. All right. I've taught them the strategy before. Strategy to trade small accounts. All right, but not at this level, not even at intermediate. I can only teach it at advanced level when I'm sure. In fact, when I taught it in the group, it was wrong because not many of them are mature enough to take that lesson. But I threw it there. Very, very wrong. Pardon me for that. If you took that lesson, it's not supposed. It's only meant for advanced students that know what they are doing, that have commanding tone of the direction of the market. Okay. So now you can now see what risk can do when we manage our risk well. You can see what it can do for us. Even in forex market, you have what is called leverage. You enjoy what is called leverage. Okay. I can trade this 200 US dollar account and trade it as if I'm trading 200 times 100. 200 times 100.
20,000.
20,000. Yes. I'll be trading 200 US dollar account and I will have if I have leverage of 1:100, I'll be trading it as if I'm trading 20,000 US dollar. That's the power of leverage. That's the power of leverage. You don't have this power of leverage in capital markets. If your money is 20,000 naira, you can't have buying power of more than 20,000. You cannot even have 20,500 except your broker borrow you. It has to be a borrowed fund. And I don't think they even borrow people like that in capital markets. So they don't enjoy leverage. We enjoy leverage here. They don't enjoy better risk. Better risk control. We enjoy better risk control here. If you have developed yourself so well, you will discover that in forex market, even if you are losing your account, if you, let's say you have 200 US dollar, God forbid, assuming you are losing it, you can't lose it in 1 day, you can't lose it in 1 month, you can't lose it in 2 months. It will be gradual. If you are losing, just imagine you are losing $2. How many times are you going to lose $2 for this one to go? It means that you must have taken 100 trades. And if with this 100 trade, it means that you did not even win anyone. Is it possible? It's not possible. So what I'm teaching you is in such a way that you should be able, to, you lose few, but the one you win it very big. So when you win it very big, it cancels out some of the losses and you still return in profit. So that is the basics of risk management. So what have I said in this risk management? Number one, I said never risk more than 1% of your account. When you get better at doing it, you will now be increasing the risk. But for now, don't risk more than 1% of your account. And I've told you, how do you calculate 1% of your account? It's simple. If your account is $1,000, just say 1 divided by 100. Okay, times what? Times $1,000. Okay, with that, you get 0, cancel 1 0. That 0 that's here. Another 0 here, cancel this 0. What is left? 10. 10 times 1, 10. So 1% of $1,000 is $10. So if you are trading, you have to program yourself. When you get to intermediate class, I'm going to teach you how you now calculate the size of your trade in such a way that if you peradventure lose, it's not going to be more than $10. I'll tell you how to calculate that. Do you understand now? So another thing I would like to tell you about risk management is simple. Do not look at somebody's trade as a yardstick. Do you taking your own? Calculate your own. Don't look at, if you see, let's say somebody like me, I don't 5 positions. I have calculated all the risks based on the stop loss before I put those positions there. So if you don't know and you are following me, there will be mistake. That's one warning I have to give you. Remember, all these things I'm giving you guidelines to show you the overall scope of the market. I'm not teaching you. Do you understand? I don't know how to present. I don't know how to say this. I don't know how to present it. All I've been showing you since day 1 up to this day 5. They are general overview of the entire financial market. At this level now, everyone who has been following us painstakingly must have discovered if this is what he can do or what he cannot do. And I've broken it down so simple enough for you to know that you can do this. You can do this. And now, let me now tell you another thing that you must take very seriously. That's what is called balance, total balance, TB, and equity balance. Equity balance. When you get to your MT4, again, when you get to intermediate, I will show you how it appears. When you are trading, your balance will appear at the top. Okay. So, but at the equity, this equity is another balance here. So if you are making money here and your profit is grown, then this equity will be greater than your balance here. This equity balance will be greater than your total balance because you are making profit here. What do I mean? If you are making profit of $10, your total balance is 100. Then your equity balance is going to be what? 110. 110. So if you are planning a trade, you can even plan the trade based on 110. Although you have not earned this 110 absolutely because you have not closed the trade. It is when you close this profit of $10 that this one will be 110, this one will now increase. This your total balance will now increase to what? 110. This total balance, that's what you have. This equity balance will be fluctuating depending on whether you have profit here or you are having loss. Okay, let's assume that where your profit is, you're actually making loss of $10 minus $10. And your total balance is 100. Therefore, your equity balance will be equal to what? 90. To be reading 90. Why? Because this your total balance is being reduced by what? By this minus 10. Because you are reading negative. I know why I have to take you through this. So if you now want to plan a new trade, are you supposed to plan the trade on 90 or you are supposed to plan it on total balance of 100? I'm listening.
You have to plan the
You
trade
plan
on
it on
90.
the 90.
Correct. So never make the mistake of planning your trade on total balance. Plan it on equity balance. The only time you will plan your trade on total balance is when you have no trade running. And when you have no trade running, your equity balance is equal to your total balance. You can see, I'm not opening MT4, but I'm telling you how it is. When you get to intermediate and I'm showing you, you say, oh, Mr. Nat, this is what you were saying that time. That is it. When you have not opened a trade, your equity balance is equal to your total balance. Because this profit is not there. Whether you are losing or you are gaining, this one is not there. So this total balance of 100 is going to be this total balance of what? 100 here. In that case, you can plan your trade on equity or total balance. It doesn't matter. But as soon as you have first trade running and you are making a loss of minus $10, okay, this your total balance will reduce. It will still stand at 100, but this your equity balance will reduce to 90. So if peradventure you want to enter another trade, never plan that trade on this 100, plan it on this 90. It means that you are going to calculate 1% of this 90, not 1% of this 100. So use this as a yardstick, as a sample. If you have 10,000 US dollar account, it's the same thing. So I'm just using this a simpler figure, to illustrate the point. So these are essential ingredients for success when you talk of financial trading financial instrument. Risk. Don't joke with it. So I think I've told you the basics of all the risk management. Now let's go to trade management. Understanding trade management. See, risk management and trade management, they go hands in hand. All right, they go hands in hands. Risk management and trade management. When we say trade management, let me give you an example. As if you have something like this. You have something like this. I told you it's an uptrend. You have a break of this structure down before you have another one down. Okay, you have consolidation here. Okay, you have break down. You have up here. Now, let's assume that you have this Asian session range here. All right, you have this range here. Okay, now let's assume that you have Buffy here, this candle here, you have another candle here, and drop this one along this way to the upside. You have measured that this is a potential area where you have your buy, and then market has broken this to the low to pick liquidity here, and this happened exactly to be this London, this is New York, and then you pick this guy here. There's the buy setup here. This short, this long. Now pick it here, this way. You want it this way. This is what you want to catch, guys. You want to catch from here to here. Now your stop loss here is 1.0541 and you are entering at 1.0466. That's about 26 pips or 27 pips. Okay. Now you see stop loss size equal to 20, let's say 25 pips. So if your account is $200 US, you now look at it, you have to use a 0.01. In that case, this is the correct. That's the minimum. So in that case, if you lose, you are going to lose 2.5. You're going to lose 2.5. Okay. So now, what am I talking about? I'm talking about trade management. You want it to be here, guys. So you have entered here, and the market moves like this. Immediately, the market moves like this. It has gotten how many pips? From here to here. About, let's say about 129 pips, for instance. It's not even be up to that. Once it moves, let me clean this one. Once it moves like this, you push up like this in your direction. What do? You know that here, if you don't adjust these guys, this level of stop loss, look at where it is here. Here, you have to adjust it, move it to this place. Move it to this place. Move this place, move it to the end. You see any stop loss? You are not missing anything now. You have removed this stop loss from down here. You have moved it to the entry point. This process that we have just done, as simple as it is what is called break even. What do I call it? Break even. So in business management, break even is at a point where your revenue, your total revenue is equal to what? Your total cost. All the revenue that you have, the cost you incur is equal to it. In such a way that at that level, revenue, total revenue minus, if you carry this one back to this place, we are going to mathematics now. Total revenue, which is here, minus total cost equal to what? 0. So this break-even point is at a level where you are neither making profit nor making loss. You are not making profit and you are not making loss. So as soon as this guy push here, you have moved your risk back to 0 because you are moving to any point. So if at any instance, if this market should make mistake and come down and hit this place like this, it's taking you out at the entry point and not at stop loss point. So the process of achieving a break-even in your investment or in your trade is a crucial aspect of trade management strategy. Do you understand? So if after you are break-even, the market now push up and do something like this and push like this, you know that it has broken a structure here. So it's not coming down here. So what do? You now move your stop loss for this entry point and move it to this level. What have you done? You have booked profit between here and here. Okay? So you are not saying that you don't want to, neither want to lose, nor want to gain. No, you are not even talking of break even again. You are talking of making small profit. You have made small profit. Remember, this is your target. So this market now move here in another session, consolidate here, and break low. You are happy. This guy is going up. Remember, this is a structure where you put your take profit, stop profit. So as soon as it make like this, you can even add another position here, risking another 1% because you know it's going to fall. So you put a buy here again, and then as soon as you put a buy, when this guy move here, small here, you put a stop loss here, stop loss, move it to entry here, and this one, the first position that you break even here, then you book small profit here. You adjust it from here again and put it here. It means that you have secured from here to the beginning, from beginning to this place, you have secured it, number one. You have another position running from here down here. As soon as all, you now put the entire TP here. So as soon as all get to this area, they will hit TP. So you now see that you have two positions hitting this TP at the same time. One starting from here, another one starting from here. And as soon as this one moves here, you also first break it. You understand? In such a way that if it's coming down, this one will hit this one in break even, then will hit this one into deep profits. So this is trade management strategy. Okay, this is trade management strategy. Any question? When you get, when you get to intermediate advanced level, you do more of it. All right. Yeah. Any question? I'm hearing you. Yeah.
This I think I want to see this.
I can't hear you. Who is talking? Tell us your name and then ask your question.
My name is Mr. Solomon.
Okay, Mr. Solomon, ask your question now.
So I said the way you started from that angle.
Hey, it's breaking. I'm not hearing. It's breaking. Is anybody hearing his question? It's breaking.
Hello, sir. Are you hearing me?
Yes, yes.
Said the draft. We just started it.
It's Mr. Solomon. It's like your network is bad. I'm not hearing you. It's breaking. Is another person hearing him? Is another person hearing him?
No, we didn't hear.
No.
He's breaking.
No.
It's breaking.
Maybe he should type his question. We didn't hear him.
It's his network. I'm sure it's his network. Can you change your location?
Are you hearing me now?
Yes, I'm hearing you now.
I said the way you started it from this I would like to understand better from there.
Which one? Which one?
Yes, this angle. Yeah. So you started from the demand. Yes, yes, from that angle down.
Okay, okay, this place, Abi.
Yes, yes.
Okay, let me repeat it again. Let me repeat it. I said you're having a long position here. You want to buy this, your TP. This is your stop loss. All right. And now, as soon as this guy moves, sorry, I want to clean up some of this stuff so that because I will still be drawing some so that they will not confuse you. Let me just clean up some of them. See, what we are doing here is globally acceptable standard practice. Repeat the same feat in United States of America. They will say, yes, you are sound. That's the right thing to do. Go back to Brazil. You are not going to see any different thing. Go to Australia. In fact, this one might even be better than what they are doing there. This is the best acceptable, practice for trade and risk management. Everybody has his own. But one thing I want to tell you is that I have gone I've learned under many mentors, and I've seen what they do. And I also told you I know what works and what don't work. All right. So I've seen them all, both them in United Kingdom, those in Canada, US, Pakistan, South Africa. I've had them. When you go to your house, go and Google Market Trader Institute, MTI. I was their student for 1 year. That's in US. Okay. You go to Wave Trader, based in United Kingdom. I've been with them for more than 4 years. You go to Victor Manena from South Africa, Elliott Wave Theory. I've been with him for how many years? So I know all the risk, strategy they all adopt, the trade management strategy they all have. This is the best. I can't deceive you. So now let's go. Assuming you have this, you want to buy here, you want to take profit here, this is your stop loss here, this is your entry here. I am saying that when you enter this trade for a buy from here to here, as soon as you move to this level, what do? This is your stop loss, which is 0.1.0529. I'm saying that you are going to move it. You are going to delete it, delete the stop loss. And then you enter this one where you enter 1.050651. That's the meaning of moving this one back to this one. Because you have deleted where you were before and you are moving it to where you enter from. And I'm saying that this process here is what's called breaking. Because your total revenue minus total cost is 0. So it's 0 here. So you are not losing anything. And I'm saying that if as the market goes up like this, it corrects like this and pulls down before it goes up, it's another opportunity. As soon as it pulls up like this market, if it's an uptrend, will never come below this area. So instead of having a break even, you can move this level here on the stop loss, move it to this level. Type this place as if it's your stop loss. So if you type this price below this structure as your stop loss, it's no longer a stop loss, it's stop profit. Because it is only when it is going down that you hit it here. It's stopping your profit because between here and here, you already have small profit now. But if you left it here, it will come and hit it here and hit you at entry, hit you at stop loss. So that is number one. Number two, if you now come to this level and you have corrective structure, break down before you are going up, that's another entry. Move this stop profit from here, move it up here, gain more profit, and then enter another position here. So when this position now move here, repeat the same thing you did here. Move the stop loss from here, move it to entry. When it's moving, move it to follow it. And then when all reach this place, close the trade here. So trade 1, trade 2, close here. Do you understand it now? That's what I've just explained in that brief description. Do you understand it better now?
Yes, sir. I understand.
Oh, correct. So any other question?
Yes, hello?
Yes, sir.
Yeah, that process you just explained now, sir. Can it be called layering?
Layering.
Yes.
Well, it may be called layering, but I've not heard that before.
You layer each of your profit for maybe like now, maybe for every 13 pips you gain, you move it up so that if the thing is trying to come down, you can start to be closing them one by one. So you layer it kind of.
Well, it may be because there is nothing like something is right and something is wrong. It is only when somebody has not heard something before, they will say it's wrong. I'm not that kind of person. You understand? It is only those that claim they know it all. Those are the people that say, this one, there's nothing like that. There's nothing like that. No, I can't say that. It's possible that there is something like that. But in my entire years of studying, practicing, I've not heard it before. What I rather heard before is what is called, what do you call it? Guys who have been trading before, what do you call it? When you are moving, trailing stop. You call it trailing stop. You are trailing your stop. As the profit move up, you move your stop up. As it goes up, you are closing it with your profit. As it go up, you close it, you are moving the stop, you are following it. So finally, it will now come down and hit it. When it hits it, that's when you go. You understand? But layering, it may, we'll find out. If, yeah. Have you heard something like that, or it's just your own? You're just giving your own meaning.
No. Where is what I've seen is layer. They tell you that layer your profit, at every 10p, 15p, move again. You know, you like that.
No, what? Let me. What
Yes.
I've heard about layering or layering is
Yes.
something like entering a double possession in a particular spot, gathering it up to allow all to run at once instead of waiting for the price to move to your favor. You just lay your positions. That's what.
Okay, meaning that maybe if you are willing to risk maybe 1%, you just spread it to 0.5, 0.5, and hit two positions at once.
Yes.
Okay. I think I am getting it now. All right, maybe you want to risk, let's say, two positions now. You can decide to say, okay, if that's the case, let me, instead of me to enter 0.2 lots, I will now enter 0.05, 0.05, 0.05, and then last one, 0.05. 4 positions. So you have layered it. So all will be running, if they are in profit, all will be running at the same profit. Okay. All right. So it's clear. I think it's clear to everybody. That's layering. I'm learning. I'm learning it for the first time. I'm learning. All right. Okay. So any other question?
Hello, sir.
Yeah.
Sir, this I still get this.
We are not hearing you. It's breaking.
Are you hearing me now?
Yes, I'm hearing you now.
On this risk management,
Yes.
that
I didn't hear you, sir.
talking about as we calculated before, I said it is
I'm not hearing. Who is talking? Is it Solomon?
yes,
Your network is bad. It's breaking. We barely heard you here.
Hello, sir. Are you hearing me?
I'm hearing. Is this something you are doing to it? Because I noticed that each time you want us to hear you, we hear you. Is there anything you are doing to it that is making us not to hear you? Okay, I'm hearing you now.
Like the way to calculate it, like the pips, when we calculate it like 8 pips, then you said 80 pips by 0.01 by 10.
Yes.
Yes. So I want to understand that 0.01. You know that 10. That's 0.01.
Okay.
I want to understand it.
If I want to get you right, it's your problem that 10 I multiply it with.
Yes. I want to understand what that 0.01, what does it stand for? And that 10, what does it stand for?
Okay. Now listen. You can mute yourself back. I say 0.01 times 20 pips times 10. Okay, when you get to intermediate class, you will know why we are multiplying it by 10. All right, it is not for this class. But now this 0.01 is the lot size. Okay, lot size. Lot size multiplied by pips stop loss in pip, stop loss in pips, or or profit in pip, then multiplied by 10. Okay, so now this lot size is the same thing as this 0.01. That is the size of the trade. This 20 pips is either the stop loss size or the profit that you have moved. So multiply by 10 to now get it in either profit or loss. Profit or loss. You must multiply it by 10. The reason why you have to multiply by 10 is in your intermediate lesson. You get it there. It's not for this one. There are things that what you should know is that there are things that I cannot teach in this class. Because if I teach it in this class, I'm wasting my time. For somebody who you have people here who have not heard what is Forex before. Okay. You've not heard it before. So if I'm not teaching them something like that, I will confuse them. And I don't want to confuse them. But there are some guys here who have been trading before. If I explain it, they will understand. But of course, they are in the same class with those who have not heard what is Forex before. So it is I'm duty bound to make sure that, I censor, I categorize the limits to which I can make. I categorize the entire lesson in such a way that I don't make something complicated for a newbie to understand. But as soon as I get this, I know how I can build on it in such a way that I will throw in this one and he has to understand. You understand? So for you to get a pips value or a loss value, you must multiply it by 10. Now, if you don't multiply this by 10, just imagine what you are going to get. Can you do 0.01 times 20 for me? 0.01 times 20. Don't put 10. Don't put 10. 0.01 times 20. What's the answer?
0.2.
Can you see? 0.2, which is ridiculous. So you must multiply by 10 to get it in peak value, in dollar value, in dollar value. When you want to get it in dollar value, multiply it by 10. So that's just it. At the appropriate level, so you get it better. Okay. Another question. Another question. We have spent 50 minutes right now. No, we have spent 1 hour 20 minutes. So in the absence of no question, this comes to the end of the 1 week free course that I promised you. All right, I've started, I've looked at the entire program that you call financial markets. Everything I've taught you from the 1 to the 5 is what you're supposed to know to be able to trade very well. Remember, something is very essential that I must remind you. There are 2 things you must do in order to achieve success. Number 1, you must imitate. You must imitate. Then number 2, you must innovate. You must innovate. Okay? So what do you mean by imitation? Imitations mean that whatever I'm doing, if you want to follow me and you believe that whatever I'm doing is the right thing and you love it and it makes sense, and maybe Mr. Nat will tell you that before you sell this pair, it must come like this, come like this, come like this, break up. If you give, break up like this, then you sell it like this. This is what Mr. Nat said. And you believe in it and it's working for you. Imitate me. Imitate me. Whatever I tell you, where you don't see it, don't take action. Mr. Nat tell you that this fair value and they say if you break up like this, pick liquidity at resistance, sell it. If you believe what I tell you, imitate me. It takes you time to imitate somebody that you believe is your mentor. But after you have imitated that person, you are going to work yourself to a level of professionalism that you now begin to innovate. You now go to move to the next step, which is innovation. At this level, you have imitated me so much that you have started making your own discovery by yourself. Okay, there are many things I tell you here that I can make boast to tell you that go and search all the textbooks in the whole world, you are not going to see it. Go to YouTube, you are not going to see it. Go to anywhere you want to go, you are not going to see it. It is a product of my own discovery, and you are not going to see it anywhere. So why am I at a level where I can innovate? Why am I at a level that I can discover, I can make a lot of changes to one thing or the other? Because I've imitated some people too over time. And as a result of my, imitation, I'm able to innovate. I'm able to come up with an idea. I'm able to add and subtract to a trading system that works. That is why I can innovate. So you too, you are beginning now. You must be able to continue to imitate me. How am I doing it? The way I'm doing it, does it make sense? Is that how market is supposed to be analyzed? If your answer is yes, then follow me and imitate me. Copy me. Anything I don't do, don't do. Anything I do, do. For now, when you now get to a level, you get to a level that nobody will tell you before you begin to innovate. You begin to say, Mr. Nan used to say this. But I discovered that after this, at times to come like this, come like this, come like this, go back again before you come. Can you see? You are adding your own innovation to the stuff. So if you get to a level, you now begin to create your own trading system, recreate another person's trading system, and bring out the best out of them. Do you understand? That is my final word for you. Then the next thing I want to say is that, well, some of you have started sending me message on how to open your live account, preparatory for intermediate class. I'm opening some. Well, the rule is simple. I've said it. I'm not going to teach you or train you, coach you free of charge, and you now go and open account on another person link. So when you are trading on what I'm teaching you, the person will now be benefiting. So me, I will now be collecting thank you. God bless you. God bless you. God does not bless empty hand. God does not bless empty hand. I will not take that. So that's why I said you must open your account on my affiliate links. So I'm going to give a space of 1 week. Next week, whoever want to take decision, a week is enough to take decision. Take your decision whether to open their live account and fund it. All right. And then one thing again is that you take your, let me just finish that. You take your decision within 1 week on what you need to do. Then I'm also preparing so hard and working so hard to ensure that I start working on those intermediate classes, videos, and all those things. And essentially, what are those things that are on intermediate? The overview, the general overview of what I have told you. It is in that of intermediate and advanced. We now be taking them one after the other, and now be treating them into detail. I'll now be putting the pieces. I'll be putting it together. Some of the things I just mentioned and pass, it will become a topic that you have to deal with. So by the time you are dealing with it like that, one after the other, a time will come that nobody will tell you before you tell yourself that you are a professional trader. So that's how it is. But the general overview I've told you is to show you that what you're about to do is not hard. Okay? So now the way the intermediate class is going to run is different from how this one is running. This one is running as a group something. That one may not run as a group because I told you I'm going to produce a YouTube video. I'm going to produce video and make it private, not public. So if I see that you are qualified to join the intermediate class, what I will do is to give you the link to those videos on YouTube, which only you can watch there. You can't even send it to anybody. You now watch it. You watch those intermediate videos. You watch everything there. Then I will now be coming up personally to bring everybody together. All right, I'll bring everybody together and do training. You'll now be attending Wednesday live session by 12 p.m. You attend it. Some of those things you are learning intermediate, you see how we break it down practically in the chat. Do you understand now? So by virtue of that, you become a permanent member of Wednesday live session, and then we break down chat together. So what you are learning in theory in intermediate class, you'll be seeing them work practically in Wednesday live session. I hope it's clear now. If you have any question regarding that, you can ask. And then in the absence of no question, I think it is right to draw the curtain here. No question?
Yeah, thank you so much, sir. No question.
Okay.
Hello?
Sir.
Yeah, you say you have 2 brokers you want to recommend.
Yes.
Now, like now, you mentioned Odd Forex.
Yes.
Suppose you already have Odd Forex account open, can you see change the affiliate link?
Yes, you write to your account officer.
Okay.
You now copy my affiliate link, my IB number, send it to the account officer, tell him that this is the man that owns this link is the one that is providing you with financial education as regarding your trading. So you want him to benefit from your trading. That's the one you want to use. They will move it immediately. It takes less than 30 minutes to do that. And you will not need to go and open a new account.
Okay.
Yes, sir.
All right. Okay, thank you.
Yes. Another question? Okay. So let's call it today. So congratulations everybody for taking this class, and I thank you all for attending. God bless you all. See you next time.
Thank
Bye-bye.
you. Thank
Yeah.
you very
Yeah,
much.
thank you
Mr.
so much,
Nat.
sir.
All right,
Thank you
all
for
right,
your
God
sir.
time,
bless
sir.
you too.
All right, sir. Bye.
Thank you. We are grateful.
All right, thank you.